The following is an update and technical analysis on Applied Digital Corporation, a company of the financial services sector in capital markets, here off the daily interval, where I had mentioned on the 9th of August 2023, we were trading spot price $7.25, where we had a major reactionary, concealed, hidden primary uptrend line here, cuts through just a series of wicks, a ton of reaction right across the board, ultimate multitude of reactionary highs and lows to strengthen the validity of this primary hidden key inflection point, where we ended up breaking down, putting a nice, clean, divergent high with negative, steep, jagged divergences amongst all three technical momentum indicators, where we ended up putting a nice, clean, daily, solid candle close below, ended up having that snapback and or counter trend rally on a pinpoint, beautiful primary backtest scenario. That's when I issued the sell signal when we got rejected right off that key inflection point. And I had mentioned in my previous video in technical analysis of Applied Digital here that I solely believed there was more carnage to come. I had remained adamant that there was more blood to be seen with a huge rush, again, of bull traders, long traders being trapped into an ultimate rush for the emergency exit doors. And here's the update. Calling it from the 725 handle there, and the entirety of that trade thus far has been good for, call it a 32.6% crash. Major, multiple double-digit crash there. And we had a reaction right amongst the 492 price support, really to the button, especially if you're an active and or day trader. It would have netted you in a single day's worth right there. Good for 4% in gains on a single day move to the upside. And I believe we've reached a critical juncture alongside the 200-day moving average, honing in up above. And that is will remain a crucial juncture where the price support level off this 492 handle is going to be highly correlated with the top of the gap there. And if we snap that level, if we drop this level, if we completely break down from this level and put in a solid daily candle close, in my opinion, will spell a secondary sell signal and a potential all-out major, another 30% crash to the downside on a complete backfill of the gap, where I additionally have this primary reactionary uptrend line here off the July reactionary lows, just a multitude of reaction right across that board to further validate it. And that would be a nice clean, especially if we have a consolidation phase of a prolonged downtrend. We could end up backtesting really to the button there on a dual line of support, just offering a great risk reward ratio on a long trade setup and a move to the upside if and when that juncture ends up really panning out there. But again, just a major, even bigger price support level than we had initially had on that breakdown sell signal. And what's more significant now is we have a potential, what I would call a bullish falling wedge pattern, where we do have positive divergences here off the hourly near-term interval on multiple indicators. So again, very cautious. And the reason for me posting this video is additionally, we are crafting more bullish and only extending these positive and or bullish divergences. So again, a breakout above this primary reactionary downtrend line, in my opinion, would issue in a potential buy signal and or an unfilled gap to the top of that hourly interval too as well. And very cautious to either cover shorts, cover profits, and or wait patiently for a breakdown sell signal below that 492 price support level. Because if selling pressure were to rise once again here, and we synchronize right back down, getting rejected amongst this primary reactionary downtrend line, take out the 492 price resistance, then these positive and or bullish divergences will be under threat significantly, with already a puncture below their zero line thresholds here in the oscillator. And with burned out positive divergences, I believe comes even swifter selling pressure with even more extreme volatility.